Hello everyone, this is Samie and I welcome you all to eAcademe from the platform of CA Educationist. In this video, I will discuss the two bases of accounting that are used by business entities in preparing their books of accounts. Additionally, we will try to understand why profits and cash can be two different things for a business. Accrual basis of accounting or accrual concept says that we should record revenues in our books of accounts when they are earned, irrespective of when we actually receive cash against them. Likewise, it says that we should record expenses in our books of accounts when they are incurred, irrespective of when we actually make payment against them. In other words, this concept emphasizes on recording the revenues and expenses in the period to which they relate instead of waiting for the receipt or payment of cash against them. It is normal business conduct that we may receive cash in advance or with delay from the date of sale of goods to our customer. Likewise, it is normal that we may pay for expenses in advance or with delay from the date or period when we use benefits against those expenses. Recording revenues and expenses according to cash receipts and payments may result into recording them in the wrong periods. Therefore, this concept wants us to keep track of the period in which revenues and expenses are actually earned or incurred so that those are booked in the relevant periods. For example, we sold goods worth $100,000 to a customer and issued him an invoice on December 1st, 20x4. The customer paid us on January 20th, 20x5. Assume that our financial year ends on December 31st. Accrual concept says that if we wait for the receipt of cash, we will end up recording revenue in the year 20x5, whereas this revenue actually relates to the year 20x4 when we invoiced our customer. Therefore, according to accrual concept, the revenue of $100,000 should be booked in the year 20x4 and a receivable of $100,000 will be booked in our accounts on December 1st, 20x4 till the cash is received against it. The accounting entry on December 1st, 20x4 will be receivables debit and revenue credit with an amount of $100,000. Let us now take an example of expense. Assume that we paid rent of our company's building amounting to $50,000 to the landlord on December 15th, 20x4 in advance for the month of January 20x5. Since benefit from the use of building will be derived in the month of January, accrual basis requires us to record this expense in January 20x5 instead of December 20x4. However, on December 15th, 20x4, a prepayment of $50,000 against cash payment will be recorded to reflect an advance payment for a benefit that will be received by us in the next month. The accounting entry on December 15th, 20x4 will be prepaid rent debit and cash credit with an amount of $50,000. Whereas in January 20x5, the entry of rent expense will be booked by debiting rent expense and crediting prepaid expense with an amount of $50,000. Accrual basis of accounting is one of the reasons due to which profits of a business as computed from income statement are usually different from the actual cash generated from operating activities. It is possible that profits are higher than the cash because payments are yet to be recovered against several sale transactions, but we booked revenues against them. Or several expenses have been prepaid, but we haven't booked their expense yet. Likewise, it is possible that profits are lower than the cash because payments are recovered in advance against several sale transactions, but their revenues will be recorded only when sale will actually occur. Or payments against numerous or high-value expenses have been delayed, but their benefits have been taken and related expense has been recorded. Accrual basis of accounting is usually contrasted with cash basis of accounting. As the name suggests, cash basis of accounting says that we must record revenues and expenses when they are realized in cash or paid in cash, respectively. This means receivables, payables, prepayments, or advances are not recorded in cash basis of accounting. Accrual basis is considered as the standard accounting practice for most companies because it provides a more realistic and accurate picture of financials. Accrual basis is adopted by all companies who have to publish their accounts. On the other hand, cash basis of accounting is usually adopted by only selective businesses. For example, those who do not have to publish their accounts, or those who have few transactions, or those who do not deal in credit. In a nutshell, basis of accounting provides you guidance about when the financial activities should be recorded. Cash basis records those activities when money changes hands, whereas accrual basis records them when the transaction occurs, whether or not any cash has been received or paid. Thank you for watching the video. For more videos, keep watching the series of eAcademe from the platform of CA Educationist by Muhammad Samie. For any queries, you may WhatsApp or email at the given contact details.